things in US are clearly improving. Post-President Trump has been selected. And if you look at the Bloomberg consensus S&P 500 earning growth for 25 and 26, they both are mid-teens. Now, this is a setup very similar to what happened during Trump 1.0, when in 2016 he was elected. Both 2017 and 18 had a very strong earning growth. So I guess that's where, the valuations for Indian IT sector names are on a tear in the last 2 years, despite earnings downgrades. And I guess we are cautiously optimistic on Indian IT sector is concerned, just because, the macro is clearly on an improving trend. And you just show the rupee trend right now, where rupee has started to depreciate very sharply against US dollar. And that again is clearly positive for exporters, particularly in the IT sector in India, both from translational as well as transactional perspective.
What about the currency's weakness? How much is that helping IT companies, or are they hedged? And beyond a point, the weakness really doesn't add into their numbers, into the bottom line.
So Tanvir, yeah, they do have their hedgings for next 6 to 9 months, and we see that whatever depreciation happens for rupee against US dollar, the corresponding impact is there on their FX loss book or the gain book. But I think if you look at from the margin perspective, every 1% depreciation in INR versus US dollar expands their margins by around 25 to 50 basis points in the immediate next 1 to 2 quarters. But yeah, I think, given that this sector is not concentrated, too many companies out there competing with each other, these benefits have to be passed on to the client with 1 to 2 quarter lag. But having said that, the translational positive impact is still there for the sector.
Right. I do want to get your sense, Sumeet, on the pecking order among the big IT names, you think?
Yeah, Tanvir. So we, recently upgraded TCS from hold to outperform, largely because of valuations are clearly attractive on its own history, as well as to the peers, where it is now trading at parity to HCL, Infosys, and even Accenture as well, despite having a very similar growth outlook. So TCS clearly, is one top pick we have. Other than that, Tech Mahindra is another top pick we have in the large cap space, primarily because of the structural turnaround that company is seeing under the current CEO, Mohit Joshi, where he previously has headed BFSI and healthcare portfolios at Infosys. And Tech Mahindra, if you know, traditionally has been very heavy on telecom sector, which has its ups and downs and generally not very high on tech spending. And that's where they want to diversify away from telecom into healthcare and financial services. So we believe that apart from, the structural margin improvement, what have been promised till FY27, other than that, they will be able to diversify away from telecom into BFSI and healthcare, and will be able to outperform their larger peers by FY27. So that's another name we like. And then we also like Persistent Systems, which is, a very strong data analytics play on AI. Secondly, 50% of their revenues come from product software engineering, where the market is pretty large and growing at mid-teens, where they have consistently gained market share. And then Persistent also has a very, very strong Salesforce practice. So, Salesforce CEO Mark Benioff has been in the news for last 2 to 3 months around agentic AI. And I think that Persistent will be a very strong play on that agentic AI launch.